Hi, everybody. Hiya. Good evening, ladies and gentlemen, boys and girls, brothers and sisters. All right, let's get started here. Okay, there we go. Get to move the PowerPoint along here. And as I just get everything together on my PowerPoint, here we go. I've got two monitors. See, I've got two monitors, and I have the what's coming up here all queued up in the one, and of course what you're seeing on the other. All right, let's get started, folks. My goodness, it's 8:03 Eastern here. Let's go. Here we go. Okay. Uh, my brain is ahead of my tongue sometimes. But anyway, good evening, folks, and welcome to another DayTradeSPY.com's weekly fireside chat. Pretty soon we're gonna have to change it to maybe a beachside chat because we've got actually I think we're gonna be under a heat advisory or a heat warning or something coming up in the next few days. So I think probably next week we should change this from fireside to on the beach, have a nice beach scene. So anyway, the funny thing is a week ago was a beautiful November day, but it was rainy and cold, and had to rescue my dog. I remember that was a week ago. Kind of hard to believe it's been so long, but anyway. All right, killing time a little bit because I see a lot of people still joining us here. Come on in, gang. Lots of room right here up in the front here, and it is Sunday night. Another spectacular evening here as we get into the weekend review, a little bit of an introduction to trading. Anyway, my name is Hugh, and it is Sunday, the 16th of June, June the 16th, 2024. Folks, there's a questions box. You'll find a little like icon on your Zoom dashboard where it says questions. Just click on that. I am the only one that sees that. I see that we are going solo here tonight. I guess Aaron's got the night off. But anyway, we're good. All good. All good. We know how to fly this thing, right? We've been doing it now for our 15th year. Can you believe it? 15 years, been doing this every Sunday night, every Sunday night. All right. If you are new to options, let me know in the questions box. And if you want a primer, then we'll do one later, little bit later on. Okay. I noticed that most people are familiar with options and they generally don't need a primer on what options are. But if you are new to options, we'll stick around later and give you a few minutes of time with that. Okay. And happy Father's Day to all, by the way. I hope you had a good Father's Day for any fathers out there. My daughter took me out. We went to Niagara Falls and we had a nice late lunch and got back just in time to start the session here. So it was actually very nice. And what's funny is I'm gonna let you read this here for a second. Why I say this? It's funny because time goes by so fast, and you get so busy, and kids get busy, everybody gets busy, and when you go back and you say, Father's Day, it's just I know it's a Hallmark holiday, right? They created it to sell cards, but it's kind of nice when you actually take one a day out every now and then to just kind of spend with your kids and refamiliarize yourself with them and they with you and just do nothing and say whatever you want to do, whatever you want. You just want to hang out, want to go see a baseball game. Last night we went to see. Actually, it was kind of nice. We went to see a concert last night. My wife and I we went to see Earth, Wind and Fire and Lionel Richie. Very good show, really good show, really good show. So yeah, had a lot of fun. So. All right. By attending this webinar, you fully understand and accept the financial risks involved in trading securities. I'm going to give you a second here. I'm going to give you 10 seconds to read this. I think you already didn't have. All right. You alone are responsible for all your own trading, and past performance does not guarantee future results. Charts courtesy of Schwab, Thinkorswim, and Tasty Trade. All right. Let's move on, folks. Yeah, I think you all know the rules. There I am in living color, live. And my name is Hugh, as I mentioned. Good to have you here. Thank you all. I love all your comments here. All right. Da, da, da. I like that. HFT. Happy Father's Day. Happy Father's Day to all of you. Some of you folks are writing essays here. Don't forget, I got to read this and talk at the same time. So if you keep it brief, you'll probably get read more. Better chance of getting read here. Uh, oh my gosh, Ira, congratulations here. Poppy Jane. My Father's Day gift from my daughter is a brand new granddaughter. You know what? I don't do this very often, but I can appreciate that. Congratulations, Ira. Nice to see that. Poppy Jane is her name. Wow, nice. All right. So who the heck am I anyway? I'm a nobody. Okay. I am a nobody from nowhere, and that's all I am. A nobody from nowhere that drinks a little bit of what is this? Sports hydration drink here. Mm. Look at I used to be in corporate America, graduated college, got my degrees, all that wonderful stuff, went off that career path, right? And internal auditor and all that other wonderful stuff, and handed off my money to my financial guru. He invested it, blew half of it out before I realized what's going on. It's funny how you get really tested in the real world. And then when you wake up and say, nobody gives a rat's behind about my money. They don't care. Why would they care? They just use me as a pigeon to further their own agendas, right? They get paid by whatever the products are that they're selling that day, right? They don't care about me. They don't care about you either. I got news for you. If you think your broker cares about you, he doesn't or she doesn't. They don't care about you. Nobody cares about you. Maybe your mother cares about you. That's about it. And even then, but anyway, that's when I took matters under my own control and said, okay, I have to learn how to do this. We are now with the internet, and all of us, you have all the same information as I do, right there, literally at your fingertips. It's all there. nobody has any material advantage over you these days if you know where to look for the look, right? If you know which rocks to pick up and look under, you'll get all the information you need. So after I discovered that revelation, my Waterloo moment, that's what they call it. I decided to go after um, my own financial future fortune, whatever you want to call it. Actually, it was the realization that my kids' education funds were pretty well washed up. And I vowed that no, my kids are not going to, get their education from some outfit that advertises on the back of a matchbook cover. Remember that those matchbook those little matchbook covers? Do they even have that anymore? What was that company called? Uh, ICS or something, International Correspondence School or something. They were all over the place. And it said, move up, be an accountant, move up, be a bookkeeper, move up, be a mechanic, move. And then you flip it over, and there's all these little boxes you take off what you're interested in. I think I'm gonna be a lawyer. I don't know, or whatever it was. And you take it off, they send you information, and you join this international correspondence school. So, and I thought, oh my gosh, okay, so half their education account is gone. Actually, half my retirement and their education fund was gone by the time I realized my broker had messed with me. Anyway, long story short, I learned how to do this myself, and eventually I got good at it. I started with equities, looked at futures and forex and commodities, different things, but kept coming back to this thing called options. And in the options world, I found that SPY was the best option for me to trade, and I started making some serious money. And when people noticed, they started saying, "You, would you win a lottery or something? What's going on?" And I told them, "No, I'm just trading SPY options, day trading, in and out, in and out." And I look at short-term breakouts, small daily gains, and you know what? They add up very nicely, especially if you look at those high probability trades, and if you control, learn to control your emotions. I mean, there's all kinds of stuff that goes around it, but um, I have more fun doing this, I think, than Aaron. I say that we love Aaron. Don't get me wrong; he's a great guy. Aaron, he comes from kind of a similar background, different but similar. He started trading at an early age. In fact, he opened his first trading account when he was 17. I didn't have that luxury. At 17, what was I doing at 17? I think I was still climbing trees or something. I don't know. But Aaron he was in the library, in the school library, flipping through the Wall Street Journal and Barron's and all these magazines and studying the stuff and charting. He was charting and mastered this deep dive technical analysis. He gets right under the skin, and he sees, well, what makes things tick? What are the big boys doing? Let's try and follow them. In fact, he used to be a former technical analyst at a $150 million commodity fund. And when Eagle bought us out about, I guess, a year and a half or so ago, they scooped up Aaron. They grabbed Aaron from the commodity fund, says, "You're working for us." And he's been with us in the trading room and whatnot ever since. So he's pretty cool. He's a little more serious, but he identifies those high probability trades, where um, where the market is likely to go. So anyway, that's what we do. So we have this saying that when our indicators unite, our trades ignite. And what that means is that Aaron looks at a set of technical indicators that he determines where the market is going to go, up or down. And I look at a separate set of indicators to determine is the market going to go up or down. Neither one of us knows from the other. Like I don't look at his indicators, he doesn't look at mine. We might glance at them or something, but we have our own techniques with which we identify these high probability trades. So when we both concur on a certain direction, market strength and time or whatever, it's a strong likelihood the market's going to go in that direction. You might want to just buy those options, and that's what we do. So together we make a pretty good team. Anyway, I'm sure Father's Day he's not on. I'm sure he's out with his kids doing Father's Day stuff. So, folks, announcement here. A couple announcements actually, and I forgot to insert the one for the other one, but I'll tell you about that one in a little bit here. Uh, get the SPY in the market. If you don't have that already, make sure you subscribe. Go to the website, daytradespy.com, and just simply you'll see well, here it is. You'll see the pop-up here. You'll see this pop-up. Okay, and just leave your email address. That gets you the not just the tips, tricks, and traps from the trenches. I think you get some top 7 of these things here, but you'll also be put on the list for the Spy on the Market, which is a newsletter that gets delivered to your inbox every Thursday morning. It's a quick read, about a 3-minute read, very light, relevant. It's kind of fun too. It's entertaining. We don't get into boring numbers or anything like that, really, but just subscribe there. And this week, we're actually going to be talking about our bread and butter strategy. As a matter of fact, I'm going to announce here, I don't think I'm supposed to yet, but I'm going to tell you that we actually have, okay, write this in your calendar. Okay, there's going to be a formal announcement. I don't know if I'm allowed to say this, but I think I will anyway, because why not? On Wednesday, the 26th of June at 11:30 Eastern, we are going to have a bread and butter workshop, bread and butter strategy workshop. It's going to be live. I am going to be hosting this, and we're going to see if we can execute some or one or whatever bread and butter strategy trades, and hopefully we'll make some money. That's the idea, right? And it's going to be a lot of fun. So, and I think they have a very special price and everything else. Watch your emails for that. There's going to be some promotions sent out for that. Again, that is going to be Wednesday, June the 26th. I'm so sorry I didn't put some slides in on that one here. Wednesday, the 26th of June. It's going to be a big day, actually, because 11:30 a.m. we have our bread and butter strategy workshop. Okay, it's going to be probably an hour and a half long, something like that. The other thing I want to tell you about Wednesday, the 26th, is our Inner Circle weekly meetup. We are changing it from the Tuesday to the Wednesday by popular demand. We are actually moving it back because it's so close to the Sunday. And that too is another announcement that I should have actually put up on the PowerPoint. Uh, I admit that I didn't have a lot of time to do this because did get back in time and frankly just kind of slipped my mind. But we're going to get some. There's going to be some announcements out on that one too. So any Inner Circle members, you're not going to miss that. All right, you probably know already. So that Tuesday night meetup is going to be changed to Wednesday, and that's going to be starting I believe next week on June the 26th. All right, and again, just subscribe to Spy in the Market with that little thingy there. Put your email in there, you'll get that. Okay, along with the other report. Tonight's agenda, folks, we're going to be talking to you about a review of last week, preview of next week, any questions and answers, talk about the trading room, and if enough people want, we will get into an options primer for any new people who are on here. And Ellie, you are new. Welcome. Didn't have a stock market when you were 17. Thanks, Phil. Uh, funny guy. Right, what level options trading do you do in the day trade spy signal room, spreads, butterflies? Tom, level one. Level one. All you need to do is buy and sell calls and puts. We do not do any spreads, no butterflies, no straddles, strangles, covered calls, married puts. None of that. All right. No diagonals, no anything, no naked trades, nothing like that. Nothing complicated. And here's the funny thing. I've always been one to keep things simple. Um, I don't know, maybe I'm a simple guy. I'm a regular guy. I like to keep things as simple as possible because you know why? I found that simple is good. Simple is good. If you keep things simple, I mean, look at, I have studied this, and by the way, thank you very much for Joseph T. You are new, and a bunch of other people are new. Okay. All right, cool. Look at, the simpler you can keep things, they can keep things, the better they are, right? Um, it goes in so many facets of your life. I remember, I mean, I was too young to drive at that time, but I remember, my father's cars were always, oh, I remember he had a 1958 It was a 1958 Pontiac, and then he had a 1962 Chev. I think it was an Impala or something, and then he had a 1966 Chev Impala. But one thing I remember is my father and his buddies would work on the cars, and they would tune them up. They would go get whatever they needed, points, plugs, whatever, and they would spend the Saturday mornings tuning up each other's cars. You can actually open the hood and take the air filter off and get in there you can't do that anymore. You can't do that anymore. I understand Mercedes try to seal the hood so you can't even open it. You have to have a qualified Mercedes mechanic to open the hood. I think that got turned down pretty quick by the course. They said, no, no. People should be able to get in there and open their hoods. But you ever look under the hood of a car now? Good luck finding the plugs. Never mind changing them. But anyway, things were simpler back then. They really were. Remember? And if it sounds like I'm off on a tangent, all right, this is kind of a relaxing, casual evening where we sit around and chat things. Uh, just the straightforward radio in the car. I remember there were two knobs. One was the on, off, and the volume. The other one was the tuning, and then you had five buttons, preset stations, and it was simpler. Now, mind you, we didn't have 28,000 stations to choose from, but you know. Now, I don't know. I mean, I think I can get the basics on my radio. I get choose, I get to choose what I want and Sirius or whatever. There's all kinds of other audio inputs. My cell phone, Spotify, excuse me, AM, FM, um, I don't know, a bunch of other stuff. But anyway, simple is good. And I've always been one to keep things as simple as possible because I think the stock market goes up and it goes down. How simple is that? You can make money both, and with SPY, you can make money both going up and down. So if you can simplify it as much as possible and make it work for you, then it's amazing how much money you can make. So that's why we don't get into those spreads. I used to do spreads. I used to do spreads, but I found a couple things that those people that were touting the spreads and they were saying, "Oh yeah, this spread and that spread," and they get all excited if they made 5% a week or sorry, a month. And I thought, wow, that's a lot of work. And you have to follow them and you have to roll them over into the next month or the next strike price. And you have to be very careful because there's lots of opportunities to make a mistake on a spread, multi-legged spreads and stuff. Oh my gosh. If you don't know what you're doing on that one, it's inevitable you're going to lose your money. Anyway, we keep it forward. We look at the propensity of well, the market is probably going to go up or probably going to go down, and that's what we do. So, and we'll get into that a little bit, and that's kind of how that works. So let's get started with the weekend review. Well, what kind of happened here? What shaped the market here this last week? And by the way, we like to combine technicals with fundamentals, with the mental aspects of trading, the market sentiment, right? So when you combine all these things and you look at the deep dive analysis that Aaron brings to the mix and stuff, we had a low no news day on Monday. Last Monday, SPY edged up a little bit there and found some support down around was it the 533 level or something, but there's some major support there that brought SPY up and closed at the mid 535s on technical indicators. And Aaron talked about that. So that extended into Tuesday, at least in the pre-market. But then Tuesday was another low, no news day. And we got a little profit taking there, just a little bit there, brought it back down to yesterday's support of 533. Came in off a nice little double top, downward divergence on the MACD. The market was waiting for the PPI report and the Fed announcement, which was going to be released on Wednesday. So the little nervousness set in. We kind of saw that with again, the chart pattern. We had this double top over here. I wonder if I can maybe draw on a design here, maybe work it this way here. Let's take a look if this works, drawing tools. Let me see, maybe if I can do this blue color and if I can thicken it up. Okay, so we had this double top. Oh, that's not the right one here, right over here. Double top there, and I don't have the other indicators that we use, but there was this downward divergence on an MACD. And we kind of knew that the market was going to go down. Well, it did come down, and it found some support right down here. at around 533. Okay, around 533, we found some support, and then the buyers came in, right? Right, the buyers came in, the bulls, they pushed it back up here, and that was on later in the day. So they're waiting now. What may have happened was, I think that's a little thick. Actually, I'm going to thin that out a little bit. What may have happened was there might have been a leak, right? Because somebody knows something before everybody else does. So there may have been a leak there, or at least an anticipation of a good number. And then we had some CPI numbers here. We had weaker than expected CPI numbers that had presented themselves on. Let's see here. I just have a typo here. Okay, let's go this again. Here, I had a little typo. Weaker than expected CPI numbers came in on Wednesday. That shot SPY up, just shot it straight up to, my gosh, I think we took up about 7 points right here. And that was kind of a nice little shot in the arm, wasn't it? Before settling in on the Fed interest rate announcement, they said they're going to keep the interest rates the same. I think this was the 11th straight time or something like that, or crazy. But anyway, and then they talked about it. They had the Fed announcement, and they said they still want more data. All right, things are getting in the right direction. Actually, things were really good with the CPI numbers. So we closed right there on Wednesday, a little bit down, but we stayed in that lofty position. And on Thursday we had PPI reports following the CPI numbers, all right, producer price index reports and unemployment claims. They came in both anti-inflationary, all right, but brought SPY down to 540 in support and some profit taking. So what we had was we had a nice kind of a triple top in here, and and a lot of profit taking brought SPY down. All right, found some major support again at that 540 level that Aaron was predicting, and he said there's going to be some bounce off of that, and likely based on his indicators, a move back to the upside. And I also supported that, and we suggested that if you're in calls there, stay with it, right? And pushed it back up to 542 before it finished the rest of the day. And then on Friday, we had some lower than expected consumer sentiment reports. Couldn't keep SPY up in the morning there, came down, but the bulls rallied it back to close near 543. It was just a very positive mode for SPY and investors and traders. Again, a lot of technical indicators came into play there, so that's kind of what happened. From a seasonal chart, this here is a seasonal chart for anybody who's new. That blue line is where SPY is now. The red line is a composite of the last 5 years closing price on the daily chart. So you can see how the chart moves. Now, if we zoom in on that, this is what we get here. And it looks like SPY dropped about 7 points in the last week. So we had a little bit of a negative there, even though the market went up for us this last week. But seasonally, SPY rose about 1 point the following week. So it's going to probably be somewhat of a fairly level market, I'm guessing, here coming up in the next week. What happened? June Fed meeting and the U.S. inflation data front and center. That was the attention getting news item all week long, and the response to that. The Feds did signal one more rate cut for one more. Never mind, they didn't have any. It's just a single rate cut for 2024, as inflation came in lower than expected, down from three. So they're going to have three rate cuts, but now it looks like they're probably going to even have just the one. And we're going to see about interest rates, keeping them the same. But they still expect to reach 3.1% by 2026. This is according to that dot plot that they have. So what this dot plot is, it's just a graph where the various Fed members place where they believe the interest rates are going to be, and they sort of put it all together and come out with some sort of a plan in the wash there. So while pace of rate cuts shifted, the end game remains the same. And here's what it looks like here. This is where the Feds believe interest rates are going to be in next year and the year after. So it's going to be a gentle drop. Don't expect any great moves in any quick time. Okay, so this is kind of where it's going to be right now. Right now we're sitting at 5.3%. And actually, that's not true here. 2020, well, right now, that's where we are. But they expect by the end of the year here to to get down a little bit slightly, um, and just work its way down. It's going to be a longer run down to the 3.1% than when they first anticipated, but that's okay. It's going to be a soft landing, I guess is what they call it. Here's what the numbers look like. S&P, we rose 1.6% today. Year to date, 13.9%. 1.6% we rose this last week. Nasdaq went up 3.2%. Year to date, 17.8%. And the Dow dropped about a half a point and only about 2.4% for the Dow. All right, so week ahead, here's what's coming up. We got the Empire State Manufacturing Index, often referred to as the New York State Manufacturing Index. Retail sales and industrial production on Tuesday, and Wednesday is going to be rather quiet day, low, no news day. Ready for unemployment claims on Thursday, and also the Philly Fed Manufacturing Index. Building permit and housing starts are also going to be released on Thursday. And Friday, we've got the S&P Global Flash Manufacturing PMI reports and also the Global Flash Services PMI reports. Two PMI reports on Friday, and also existing home sales. So we'll see what those numbers come out with. If they're going to be inflationary, it's going to be probably a negative on the market. If it's going to be anti-inflationary, the market will probably go up and probably seek new highs. We also had new highs this last week that we had. Watch for volatility, moderate on Monday and Tuesday, low on Wednesday, and high on Thursday and Friday. I tell you every week, but folks, please trade small, trade often, aim for modest gains, moderate gains. Never go all in on anything, right? If you do, yes, you can win big, but you can also lose big, and it's just a lot more stress. Go in small, trade often. And when I say that, people are going to say, "Well, what do you consider small?" Well, I'm going to tell you, it's all relative to the account, relative to what you're comfortable with risking. Options trading can be risky. It is risky. And never, ever trade more than you can afford to lose. I know it sounds a little anomalous there, a little ironic because that's what you're there for. You're not, looking to lose money, but I mean the reality is, an options trade is like you're putting money into this floating environment, right? Your equity goes up and it goes down moment to moment. So it's not like it's on any rock solid grounding here, We're actually in a state of flux all the time. And if you don't mind having a lot of money in that state, knock yourself out. I think most traders that I know of just like to have just a sort of a comfortable amount that they want to put in the options market and just keep making little bits of profit along the way and building up your account that way. So that seems to work well. And that's kind of what I do. All right, we have a 2-minute tutorial tonight. How do you calculate support and resistance? How do you calculate support and resistance? And without getting into too much detail, because this is a whole session on its own, a whole workshop. But generally, we look at tops and bottoms of previous price points, and I like to look at the bodies of the candlesticks. I don't think I don't have a chart up. Okay. So we like to look at the tops and bottoms of previous price points. And that now Aaron likes to look at the wicks and tails. And while they have some validity, I think the bodies carry more weight than the tails and wicks. I mean, it's not, one isn't right, the other is wrong. And they're probably both valid, but I know that you can have a trade sort of way out there, and that's going to present a wick or a tail. But is that just an outlier trade? Is that really a support or resistance level? Is it a strong enough support or resistance level? Even if you have one share trading kind of as an outlier, you're going to get that wick. Whereas I think the body just carries a little more weight in that regard as an actual support or resistance. So if you have two or more bodies at around the same price, within a penny or two of the same price, that's going to offer some support or resistance. That's kind of a straight line approach, straight across on a horizontal line. You also have exponential moving average, EMA trends. On the charts, I like to use the 10 and 20 trends. Prices will often bounce off of those guys. We also have pivot points, which you can pull up on your chart. I know you use the relevant pivot points at the time. I know Thinkorswim has the pivot point in the first, second, and third levels of pivot support and pivot resistance. So I only put those up. Those offer some pretty strong support and resistance levels as well. We install the Fibonacci levels. That's Aaron's sort of department on that one. Along with the Andrews Pitchfork, he has a whole system in that, which actually had a webinar on that, a workshop a couple of weeks ago, which was an excellent workshop. He offers some pretty good information on that. And strike prices. Strike prices can offer some psychological support and resistance levels as well. Now, not often, or not, I shouldn't say not always, but quite often, you'll find the strike price to be a certain support or resistance line. Okay. You'll see that happenings. So all of these with some configuration, some are gonna be at a different strength than the others, but they all offer support and resistance. And if you can get two or more of these support and resistance levels sort of around the same, they're going to offer just that much more support and resistance. In other words, if let's say you have a top, let's say you have a couple of tops, two or three body tops on the candlesticks, right around a strike price, say 555 or something, or sorry, what do we have? 555. And you also have an exponential moving average, the 10 and 20 together at the same price. So if you have two or more, or three or four or five, or whatever these indicators merging, that's going to offer very strong support or resistance, right? Simply because some people are watching strike prices, other people are watching the tops and bottoms of previous price points, other people are watching EMA trends. So the more people watch these, the better they perform. So when you see these things converging, consider them to be some very special, strong levels of support and resistance. And don't underestimate the power of these things. Sometimes the market will go down, and and I'm in a call option, which suggests that I'm expecting the market to go up. But it might see me not really too concerned because I'm looking over here in the trading room. I'll say, yeah, but if you go down 15 cents here, there's some very strong support, and it's backed up by this, and this, and that. And I suspect it's going to bounce off and then go back up, and then it happens. And people wonder, how did you maintain your composure through that meltdown until it hit that 15-cent rock bottom and then it went back up? They said, well, I go back in time and I found that support level. So I didn't think it was going to break through, and it didn't, and of course it went back up. So hope that makes some sense to you. All right. I did a little trading. I checked here, make sure that my my doctor is not online, and I see he is not. That's a good sign. So I'm really happy about that. So I can show you what I did here on Friday. This was using Thinkorswim. All right. So I did a few trades here. Just this is all on Friday's trade. I kind of just went in at 9:30, trade number one. And I didn't tell you how many contracts I bought. I don't want to, embarrass anybody or I mean, some people, and here's the thing that, when I used to put how many contracts I would buy, some people would say, "Oh my gosh, you're way, past, my, out of my threshold here. You're trading $30,000 or $40,000 or whatever. I'm just doing one or two contracts. I can't keep up to you on that. They felt inferior, right? And then other people would say, "Well, you're only trading $10,000. I'm trading 50,000. Why am I taking, direction from somebody who's inferior to me in that regard?" So I don't put how many contracts. Sometimes I trade more than others. Sometimes I go heavy. Just depends how I feel that day. So trade number one, I made 11 cents in 1 hour 50 minutes. But so I made the mistake there in that I had by the way, the 11 cents actually came up much sooner than what I show here. Not for my trade because I had a very lofty exit point. Okay, like quite a bit up. Because I thought the market was going to go. I don't know what it was. I think at that time, what happened was I was actually in the trading room, and I just put up a sell point way out there because I was too busy talking at 9:30. So I didn't have time to look at it, but I just put something lofty up there, sort of that if I forget about it, which I did, that it was going to just be okay on its own. As it turned out, and of course it bounced around, and whatever that number was, I think it was like 30, 40 cents up or something. I thought, okay, well, it's not happening, and I'm just going to bring it back here. By 11:20, I said, okay, just give me the 11 cents. I'll take that. I took it from 229 to 240. The reason you see these multiple lines here, the green is the buys, the red is the sell. It's just that some of these contracts sold and were purchased in lots. Okay. So they might have had one lot of 20, another of 30 or something like that. So they just bought and sold. But I basically got in for 229, sold for 240. I was in that trade for 1 hour, 50 minutes, almost 2 hours, but I picked up 11 cents there. Trade number two, I picked up another 11 cents on the 542 calls. And then by the way, all these were for next week out, June the 21st. So I got in here 11:24. 6 minutes later, I sold for another 11 cents. Trade number three, I picked up 12 cents on the 542 calls from 233 to 245. That was in just over half an hour, 34 minutes. And I did trade number four, another 11 cents. This is an 11-cent day for me on this one here. I took it from 244 to 255, and that was in just under an hour. Basically done at 109 in the afternoon. Now, had this been just 10 contracts each, my total gains would have been $450, and the most I would have invested in any one trade would have been $2,440. Which would have been the last trade there, right? Last trade, $2,440. So not bad. Now, if you extrapolate this out over the course of a year, if you make just $450, folks, that works out to like something like $117,000 a year. That's roughly double the American average wage or whatever, salary or whatever, right? And basically, I was done by, after lunch. And it was fun. I had fun doing it, and I had confidence in the trade. I had lots of time, low stress, and that's what I did. This is real dollars, by the way. This is all real dollars. So, all right, 8:41 is the time. Let's move along here, folks. The market provides many opportunities every day. We show you how to spot them, how to trade them, and I'm going to talk about the trading room right now. You heard me talk about the trading room. By the way, I'm going to get to your questions a little bit. I want to tell you the trading room is the place you need to be if you know what calls and puts are. If you don't know what calls and puts are, let's talk. I'll tell you what they are, and I'm going to bring you up in the trading room. That's where the rubber meets the road. Okay. Aaron and I host this every morning, 9:20 to 10:30 Eastern time. This is where strategies come alive. And one of our strategies is the bread and butter strategy. We don't talk about that as much as we probably should, but sort of an underlying setup that we look at. But again, in the workshop coming up next Wednesday, the 26th, I should say, on the 26th, we're going to be digging deep into the into that work into that in that workshop into that strategy, the bread and butter strategy, designed to make 6% on a daily basis, sort of an easy trade. But the trading room, this is where you can learn and earn. Aaron and I have been doing this for a long time. Okay. I'm proud of what we do. Never sort of set out to be that way, but it just turned out that way. But this is an interactive session. These trading rooms are interactive through the questions box, and it's exciting trading, right? And any questions, and we try to teach along the way here, and everything that we do, we narrate everything. So we're not just, it's not a watch you and Aaron trade show, not that at all. It's not like we're just showing off something. We're not. We're explaining what we are interested in trading. And this is the way trading room works. So we get in, we discuss the news that's going to shape the market today, right? Because news moves the markets. So we're going to talk about what the news is going to be, and we're going to talk about where the market is in relation to the overall charts and everything else. We're looking for chart patterns. We're looking for as they unfold, we install the yellow brick road as to where we see the forecasted strategy coming. It's awesome when it rolls out that way. It's actually really pretty cool. You'll love it. That's another sort of an indicator that we put on ourselves. Call it the yellow brick road. Taken from the Wizard of Oz, right? Follow the yellow brick road to the land of Oz, right? And man, that works so well. Anyway, we discuss what we're looking to get into and why, and we talk about the risks. And there are some days when we say that not a good day, or not just let's hold off a little bit. depends on how much room there's to grow into. There's a lot of things that go into it, but learn and earn from us. We've been doing this for a long time, and we don't actually have to do this. We don't have to trade. We don't have to train. We can just trade. Aaron and I can just trade and make all the money. We enjoy teaching others what we trade, right? We enjoy teaching what we trade, and we trade what we teach. So you can't go wrong with that. Watch us make some real trades, folks. That's what it's all about. We talk about the setups and we use real money as well as simulated accounts. All right, so we talk about that. And if you have any questions, of course, you're going to get them answered in real time right there in the trading room. So get your questions together. You actually have three or four different venues with which to ask questions. Right here on our Sunday night session here, we can review session. We have that session. We have the trading room, of course, where you have an opportunity to ask questions there, and also on our Tuesday night interactive meetups, which are now going to be on Wednesday, starting on the 26th. And I think there's another venue as well. I guess if you're a member of the inner circle or the trading room, you might get some answers to any quick questions. All right, quick questions. If you have to do a lot of analysis or something, might be a little tough to answer those because we actually just get very, very busy with stuff. But folks, get them answered. Get your questions answered and learn to trade. Learn to trade with us. We have some really cool emails that have come, really good testimonials that have come. Just see if I can find one here. All right, I just had one from a gentleman here. Ray R. Is Ray on tonight? Oh my gosh. Ray, let me see if Ray is on. I just want to thank Ray for his wonderful testimonial he sent in earlier today. And yes, he is. Um, yes, he is. Okay. Ray, I wonder if I can open the microphone to you first for a second here. Uh, allow to talk. I think if I allow you to talk. Good evening, Ray. Are you there? I'm not sure if I can get this working here. I'm not sure I can do this. I don't think the Zoom will work. No, maybe not. No, no problem. No problem. Okay. Uh, no problem. I think I might have dumped him. Oh, Ray, I hope I didn't dump you. I'm sorry. Oh boy. Oh boy. I hope he comes back. I hope I didn't put you on the spot. Okay, anyway. He gave some excellent accolades here. And that's what we do. We're here to teach you folks. We know how to do this. We just like to teach you this stuff. So um I don't know if you can afford not to subscribe. Now, I'm not sure what it says, how much this trading room costs you on the website. I believe it tells you it's $39.90 a year. So if you go to the website, it's going to give you the yearly price. Okay. Um, but here's what I suggest. If you email customer service at DayTradeSPY, I believe they still have this quarterly special for $6.99 available. Okay. You have to probably ask for it, but I'm pretty sure you can get this on a quarterly basis. So you're going to get the trading room. What is it? $6.99 for 3 months. Works out to $233 a month. I don't know how many trading days, 20, 22 trading days a month on average. You're talking about $10 and change per day in the trading room to get this first class, excellent teaching, mentoring from Aaron and myself. You can't go wrong with that. I think that's probably the value, I don't know, of a Subway sandwich, maybe half a sandwich. I don't know. Um, you want to you'll want to get in on that. Okay, you'll want to get in on that. All right. So I would highly recommend the trading room. Um, you know how easy it is to lose $700 in a single trade. Invest in something very, very substantial like the trading room, and I think you're going to gain some real traction in your trading on that one here. All right. There's my pitch. Now let's get into some questions. All right. Lots of questions up on the board. Um, I hope I didn't bump Ray on this one here. No, I'm sorry, Ray. Okay, some questions here. So here's a question that came in from Ed. Um, why should we always use a limit bid order? What's the danger inherent in a market order? Okay, so I always like to use limit orders instead of market orders for both buying and selling. The reason is simple. A market order is a negotiated price. Now, with SPY, you're probably never going to be very far off that bid ask price, but you could be. You could have that one outlier trade that maybe a market maker is trying to fill a particular big order and he needs another, 13 contracts that are just out there. He grabs yours and he's only going to give you, when you go to buy it, instead of paying $2.30 for it as a market order, he says, "Oh, I'll give you 240 for it." So you ended up paying 240 for something that's worth 230, and you're saying, "What happened here?" And you call your broker and say, "I don't get it. The bid ask is between 228 and 232. Why am I paying? Why did I pay 240?" And then your broker will tell you, use the market order, right? He says, yes, yeah, don't use market orders. A limit order is essentially this. It's essentially a market order with a cap. So you know the most you are willing to pay for an option. The most you are willing to pay for an option. You don't want to pay more than what it's really worth. And um, and I think that's really important, right? So if you have a limit order, let's say you have a limit order for an option of $2.30, you might get it for 228 or 229, but no more than 230, no more than 230. So you want to know the most that you're going to pay for an option. And same with when you sell it, the most that you're going, or the least that you're going to get for your option. You don't want to have a negotiator, but you don't want the market telling you what they're going to pay. You want to be as, sort of guaranteed a certain price when you go to sell it. Say, well, let's say I bought it for 230, I want to sell it for 238 and not a penny less. So you put it up for a limit order of 238. Now you might get 239 or 240, excuse me, but you won't get any lower than 238. And that's why I like to use those numbers. The second part of Ed's question concerns buying in the first minute or two. And I guess he's what he's asking for is if the market is going against you, say for the pick of the day, and this applies to the day trade spy signal as well. When you get this, so let's say you get the signal and it's a call option, or the pick of the day and it's a call option. Well, you want to wait until the market is showing that pressure to the upside. So check the 1 minute chart, and if it's a call option, then get in when you see the pressure going up. You'll see it moving up. You'll see a green, green pushing to the upside. If you see the pressure to the downside, just wait until the pressure reverses and goes back up. The question is, well, how long should we wait for that? Wait as long as it takes. Sometimes, for example, with the pick of the day, which is designed to be purchased right at market open at 9:30, 9:31, you may experience a few minutes of a move to the downside before it starts reversing and going back up. Well, take advantage of that downstroke, and you'll get it for much cheaper than if you were to buy it right at the market open, right? And you also want to wait a few seconds for the bid-ask spread to settle nice and tight right at that 9:30 bell. So I hope that answers the question there. Ed was gracious enough to say, he says, for your information, I'm 52 paper trades in, and my average daily win, including all the pluses and losses, is $442. Congratulations on that, Ed. One more week of paper trades, and I'm going to go live. I think I understand this well enough to do so now. Thanks for everything. I really learn from the quick education you provide each week. Thank you so much for Ed. That is definitely worthy of a bell. I look forward to your success, my friend. All right, some more questions. Tom C. Thanks for enjoying the music there. Why do you believe that starting the option process so early in the day is good planning? All right, so he got closed out. Okay, so what we do there is um, People call it amateur hour. Well, I'll tell you, so I make most of my money in that amateur, what they call amateur hour. I don't see what's wrong with that. The way I see it is this: the markets are anchored in time. If you anchor it at the beginning of the day, you look at a chart. Take any chart, folks. This is not rocket science. Look at any chart. What is the price at the beginning of the day? Did the market sometime during the day go up? Did it sometime during the day go down? And in most cases, you'll find, and I'm giving you a little secret here, most cases, doesn't matter which way you'd have gone, you probably would have made money at some point during the day. What we try to tell you with our various option picks is that the propensity of the likelihood of the stock going up or down is what we're looking at, the way we frame it. But and usually at that beginning of the day, the market is just trying to find itself. But if you buy at the beginning of the day, let's say the market goes up just about every day, you can make a lot of money right in those first few minutes. Our pick of the day, which we track, um, we have. I'm just kind of pulling in some of the numbers here. Most of our picks of the day um, are very short-term trades. We get in at here's one 9:31 out at 9:46, in at 9:31 out at 9:43. Here's one June the 13th in at 9:31 out at 9:34. It's not uncommon to get your 6% on these trades in a matter of 2 or 3 minutes, 4 minutes. 9:31, 9:59, 9:30, 9:41. These are the trades that go in and out quickly. 9:31 to 9:52, 9:31 to 9:34, another 3-minute trade on June the 7th, 9:30 to 9:33 right here, May the 13th. I'm just kind of pulling these randomly here. So, yes, there's a lot of money to be made in the early part of the day, and that's why we do that. So, we've been telling people, because you have to have sort of a stop exit, especially for new people. We've been telling people to say, yeah, use a 40% stop loss. It kind of gets you, it's just that safety net. We don't really implement that very often. I can't remember last time we actually had to use that 40%er, but it just kind of preserves your capital, especially if you're new. Now, if you're a seasoned trader, you may not want to use a stop loss. I particularly don't use stop losses like that. So, all right. Okay, Ira just joined the trading room today. Okay, thank you so much for that. How can I access the room as early as tomorrow morning? Since I have not received the access information, let me make note of that, Ira. And get so actually the codes were sent. Ira, can you please let me know if you got the codes or not? They were just sent out not too long ago at 8:21 this evening. They were sent out. Uh, Trading room codes. Okay. I'll check into that and let me know if you don't have the codes yet. We'll make sure you get those. So, excuse me here. All right. Tim B, you are new. Welcome. Typically place a trade within 15 to 30 seconds of market open. I find myself caught with premium price being very volatile at opening. We recommend being able to trade after say 1 or 2 minutes of market opening. So if you're trading at market open, yeah, I mean the first 2 minutes it could be volatile. So you want to wait a few seconds for the bid-ask spread to settle in tight. And then once you have sort of a solid price with that, within 1 or 2 cents of each other, the bid and ask, that's kind of a nice price on it. Just get in there and make your 6%, get in, get out. That's kind of the way it works. So if you wait too long, the moves have already sort of been made, right? So let's see here. Okay. All right, Jeff D. on Friday morning in the trading room. Aaron warned that the 10 o'clock consumer sentiment report would tank. The SPY quickly got out of my calls at a 2 cent above break even. All right. Then at 10 a.m., SPY went down just as predicted. So I bought in some puts from 341 to 361. Nice trade there on that, Jeff. In 1 minute. He did that in 1 minute. Thanks, you and Aaron, for the trading room. Pays for itself on a daily basis. Thanks for that, Jeff. Awesome. By the way, Jeff, had you stayed with those calls, you would have made money, right? Markets go up and they go down. They don't go in straight lines. And just because you're in a call and the market goes down doesn't mean maybe you should necessarily get out of that call. Let it come down, find support, bounce around a little bit, go back up, and you'll get your money out of the calls as well. So, all right, let's see. Just kind of quickly here. How much of capital is for one lot to trade SPY? Um, I don't think of them in terms. I don't really hear the word lot. Not sure what the word lot, but okay. So if you have one contract, they're contracts. So one contract is whatever the price you see on the option chain times 100. So if the option price is $2.10, each contract is going to cost you $210 plus commission and plus a couple cents of exchange fees. Okay. So if you've got 10 contracts, that's going to cost you $210 times 10, $2,100. Okay, that's how that works. So, all right. Let's see. A lot of people who are new here. All right, tell you what, we're gonna flip over right now. Um, the Zoom link for the weekly trading room was sent out Monday evenings. As I mentioned, it was sent out tonight, I think about 8:21 p.m. Eastern Time. For those in the trading room, you should have that. Thank you for that, Mike W. Keep it simple. Um, John G's asking for the pick of the day stop loss. Why 40%? Can you not use say 30% of something smaller? Well, you can, but we like to make sure that it has enough room to breathe, right? Um, it's and so John G has been in the pick of the day for a few months now. He said rarely gets to a 30% loss. A couple times it is, and it went down to the 40% stop loss anyway, so might as well reduce it to 30. You want to use 30%, whatever you're comfortable with. If you have a stop loss that is too tight, you're going to get taken out. And the worst thing about getting stopped out is the second time it burns you again. And I know the human nature, human nature, what it is, the tendency is to keep watching it if it's still your trade. So here, let's say a stop takes you, and again, I don't like to use stops. I don't use stops, but let's say a stop, if you like to use them, it takes you out, and you're still watching it, like if it's still your trade, right? And then if a few minutes later or 20 or 30 minutes later, you see it come back in a profit, right? Has this ever happened to you? And now you're getting burned again emotionally, right? It's like it's whipping you when you're down. Like, oh my gosh, had I stayed with it, I would have made money, and scratching your head, you're blaming yourself or you're blaming me. Don't blame me, folks. I just try my best to give you good information. Um, and thank you for that, Steve. Steve M. bought the Ultimate Workshop. He's over halfway through and loves it. Thank you so much for that, Steve. Great, 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 great. Uh, okay. Okay. So Tom C, customer service. All right, so sometimes customer service doesn't know exactly what we do, or they're sort of getting a second hand, sort of a second level down. They know a lot of general stuff. If you feel that you're not getting top service from them, email Aaron or myself, Aaron, AHREN at daytradespy.com, or myself, Hugh G at daytradespy.com. And we'll certainly try to address any of your concerns, right? All right. My scalp trade from Thursday, repaired that. I think I got out of that here. Brian, I'm going to have to take a look at that. Juneteenth is Wednesday. Juneteenth is Wednesday. Is that coming up here? Do we have a holiday here, a stock market coming up holiday? I think we do. Let's see. I'm just gonna pull that up here. New York Stock Exchange hours 2024. There might be a holiday coming up here. Let me just pull this up here. I think that's a good thing to know, right? Juneteenth is National Independence Day, Wednesday, June the 19th. Okay, I believe the stock market is closed on June the 19th. That being said, there will be no trading room on the Wednesday, June the 19th. It looks like the stock market is closed. Thank you for that information, whoever told me that. Brian Z, very good on that one. Thank you so much for that information. That's the other reason we like to we actually get we're like a lightning rod for information. People send us things and we disseminate this information to you, and it's actually pretty cool. Yes, thank you for that. Juneteenth. Okay, what are some of these other questions here? Markets are closed. All right. Okay. All right, let's flip over. Is there a trial for the trading room? Okay, there's no trial, but there's a money back, 100% money back guarantee. Not really sure if it's 2 weeks or a month. I thought it might be a month. Here it is, 100% money. Here it is, 100% money back guarantee. According to this, if for whatever reason you decide the service isn't right for you, simply contact us within the first 30 days of membership to receive a full and prompt refund. How cool is that? Okay. So that's the way to go. Okay. So there's no trial, but there's a money back guarantee for those who feel that it's not for them. And you know what? Frankly, it might not be for everybody. Okay. And Ray, you're still here. Good to see that. Sorry, I didn't mean to. Can't access microphone. Zoom called. Okay. No problem, Ray. I'm sorry I put you on the spot, Ray. I'm so excited. So excited when some people that are just so over the top with us here. So, all right. Okay. Dustin, how do you calculate volatility for the week? I know volatility is high during the Fed talks. What about the other times? That's our secret. That's what you're going to find in the no, it's not going to be in the it's not going to be the bread and butter training workshop. Um, we'll probably talk about that in the trading room, how we calculate our volatility. Dustin, join us in the trading room. That's where we go over all that stuff, all that detail. So, all right, we're going to get a recommendation for tomorrow, 9:10. Your recommendation, Dave A, like what are you talking about here? Pick of the day. Yes, you should have that by 9:10, not a problem here. When is good news bad for the market? When is bad news good for the market? So the market is very much tied into interest rates, right? The market does not like rising interest rates. The market likes interest rate cuts. And whenever there's a threat of a market rate interest rate hike, then the market likes to go down. So good news on the economy is bad news for the market. Bad news on the economy is generally good news for the market. Um, and thanks for that, right? Okay. All right. What is the bread and butter trade? Okay, there's going to be some information sent out on the bread and butter trade. All right. We are going to send some information out on that. And you'll want to get in on that one here. All right, let's move along here to trying to see here. So what I'm going to do here is let's see if I can skip to the next slide here. If you are new to options, Okay, let me just scratch this off. I think if I stop share and then click on this, I hope I don't lose anybody here. Current slide, new options. Bear with me here. Stop share. Are we still on? Okay, all right. You're still there. That's a good thing, right? You're still there. And what I'm going to do here is from current slide. Now, let's see, hit the share button. Bear with me, folks. I want to move into the next screen, which is okay, I think I got to do this manually here. We're going to go into the new to options screen. Here we go. Because there's some people who've never heard of options. And I just want to welcome those people because options are really pretty cool. So those of you who don't want the options primer, you can check out now. Thank you very much for joining us. But if you are new to options, here's a brief primer that I'm going to go over here for the next few minutes so that you can actually get to know what these things are. And you're also going to, and maybe we'll take another couple questions after that. All right. Sounds good. All right. What we do is we day trade SPY options. That's all we do. Just day trade SPY. Simply because SPY is the highest traded stock out there. It's affordable, diverse, liquid, huge profit potential. And what I like about it, it's exciting trading. I enjoy this. I've been trading now for many years. And frankly, I'm just as excited to wake up Monday mornings and trade as I ever was. And that's a pretty cool feeling. I don't know of anybody who enjoys going to work after many, many, many years on the job, the way I enjoy going to work. So you can't beat it. That's what I like about it. So what are options? Options are actually contracts. We are not looking to buy or sell the stock. We want to buy and sell the right to buy the stock or trade the stock, I should say, trade the stock. An option is it gives the options holder the right, but not the obligation to trade the underlying stock for a certain price for a certain date. Now, all I have to do is remember two names. They're going to be like your kids. You're going to remember calls and puts better than the names of your own children. Okay? Probably not good for Father's Day, but that's kind of the way it is. If you expect the stock to go up, you buy a call option. If you expect the stock to go down, you buy a put option. Call up, put down. Now, options come with strike prices. This is the price at which the stock can be exercised. It's the price that the option can be bought or sold for when you want to exercise. Now, we don't want to exercise. I've never exercised an option. I don't know of anybody who has willingly exercised an option. All right. You'll find that we just want to make money. We don't particularly care about owning the stock. I don't want to own any stock. I had enough of those in my day, stock certificates. What are you going to do with that? Especially if it becomes worthless. If anybody wants some, let me know. I'll probably dig up some New Era Gold or developments or whatever, some old gold mining companies shares that are pretty worthless. I'll send to you if you really want it. Actually, I cringe when I look at that. I lost a fortune on some of that stuff. Anyway, so options have expiration dates. These are contracts. They don't go on forever. Options trading is not a buy and hold strategy. What you want to do is buy it, trade it, sell it, right? And look for the next setup, right? You don't want to hold on to these things. We don't want to hold on to them at all because it's like buying an ice cube. They have this Greek, it's called the theta loss. An option is like buying an ice cube, it melts on you. And the closer it gets to the end of the ice cube's life, the faster it melts. Not what you want. So you don't want to hold on to these things, right? And you can buy two different kinds of options, actually three, actually four. There's in the money, out of the money, at the money, and deep in the money or deep out of the money. Basically, in the money is when the market price of the underlying security, SPY stock, is above the strike price on calls or below the strike price on puts at expiration. It allows options holders to exercise it profitably. Okay. So out of the money is when the market price of the underlying security is below the strike price for calls and above the strike price for puts at expiration. But it doesn't even have to be at expiration. It could be right now. So we could buy in the money or out of the money. We like to buy at the money, right where it is right there. In fact, slightly out of the money. Maybe, one out of the money. That's where we like to buy. Okay. So pros and cons of options. Here's the pros with options. A lot of flexibility. Very, very cost efficient. Huge leverage. Right. So you can get into this game. You can actually control 100 underlying shares for very little money. Each option with SPY that we trade controls 100 underlying shares. So instead of, and I'll show you the comparison here in a minute, you also have high return potential. So you get this huge leverage. The stock doesn't have to move very much to make a lot of money on the option. And I also have many strategies available. I'm not saying our strategies are the be all and end all. It just works very well for me. And when people started seeing you bought yourself new cars, and I'm talking about nice high-end cars. You bought your kids, who buys each of their kids a Mercedes? Well, okay, it was the baby Benz, and it was a couple of years old. Okay, but still, for the first car, right? Teenagers, like, come on. And who else buys an airplane? Okay, Hugh, well, you're onto something. So this strategy works for me, right? It's fun and exciting. I love it. I love it. There are cons, time decay, as I mentioned, that data loss, commissions, and it is risky. You have to have a certain level of risk tolerance to be able to trade this. If you cannot accept risk in your life, this is not the place to be. Might as well build a cocoon around yourself and just stay in bed. There's risk in everything we do in life. There's a risk in crossing the street. There's a risk every time you get behind the wheel of your car. There's a risk with everything, right? Risk of everything. So, you know, options are risky too, right? But if you're okay to accept the risk and we do everything we can to mitigate the risks, and we show you all that in our training, it's not that bad. All right. All right. So what we do here, one stock, one strategy, 1 hour a day. That's kind of our mantra. But folks, over the years, have been doing this now. We're in our 15th year doing this. I don't know of any of these trading courses that have lasted that long. Like, it's just I just don't know about that. That's all. Doesn't mean that it didn't happen, but we have the longest running trading room that I know of. So we kind of figured out what works in both trading and training over the years. Okay. So why SPY? SPY follows the top 500 US stocks. You can't beat it. The top stocks, they're all there. They're all there. All right. And it's an efficient use of your analysis time. You'll find that you don't have to spend hours and hours analyzing stocks and sectors and this and that and everything else, only to have that all blown up in your face that it never went that way anyway. Basically, we get in front of our computer about 8 o'clock, 8:30 in the morning. We've got a pretty good idea of where the SPY is gonna go that day. How cool is that? I used to be in other trading rooms before in the past and in groups, and we used to get together every Sunday night, all day Monday through Friday from 9 till 4. I think every Wednesday and Thursday night we got together. I mean, we were together all the time, Friday nights and trying to determine where the market's going to go in the next few days. You don't need to do that with SPY. You can do that right pretty much in real time. The moves are quick. You can earn your daily gains fast, fairly reliable, consistent, predictive, and forgiving. I love this about SPY. Even if you think you're wrong at the moment, if you just stay with it long enough, you'll probably be right. All right, that's where a little patience comes in. And price can be anticipated in any market. You can make money going up or down. I mean, how cool is that? How cool is that? That's why I like it. Why SPY now? Learn something new. Stay mentally sharp. Earn while you learn. Time passes anyway. You might as well make money along the way doing it. Huge profit potential for serious traders to get that dream lifestyle. You can do it, folks. Sometimes you'll hear people say, "Oh, I made 300% on SPY yesterday. I made 600% in last week. I turned $1,000 into $10,000 last week." Folks, that's very possible. That happens all the time. That happens to a lot of people. That's not pie in the sky. It's not a one-off. That's kind of that is the power of options. It's exciting, thrilling to beat the market. You can pass this knowledge on to your kids. This is what I really love. Financial security. My kids know how to trade. I mean, they have their other degrees and their education and the things that they do. But the thing is, they can always fall back to trading. My daughter, after graduating college, she said, "Oh, Dad, I want to go teach English as a second language. I think I can go to Thailand." You have to understand, my daughter never had that wanderlust at that time, and we used to joke about it. Oh, you want to go see your friends in Rochester, from Buffalo to Rochester, 1 hour down the road type of thing. And we'd kid her, so who's your travel agent? you know. And all of a sudden she's off to Thailand, and she'd say, I'd say, "Oh, Alexis, you need some money, because she wanted to travel around other countries, Vietnam and Myanmar and stuff." "Oh no, Dad, I'll just go to the stock market and pick it up. The American dollar goes far down here, and I just need a couple $100 for the weekend," and she'll go to SPY and get it. Unbelievable. So that's very liberating for me because I know that they don't need a job. You know what a job stands for, don't you? Just over broke. That's what the term job, it's an acronym for just over broke. Um, and yeah, I mean, and my son, he's an engineer, but hey, I'm looking for a new car. He just bought a brand new Suburban. Got it from trading. It's an expensive car. It's a truck. He loves it. Folks, pass this knowledge on to your kids. Leave your legacy. Let them know how to make money on the stock market. This is a very cool thing to do. All right. Stock options comparison. People wonder, well, I'm not sure what the relationship is. Let's say you want to buy 100 shares of the stock SPY at $542. You're going to invest $54,200. Or you can buy, say, one contract at $3. That's going to cost you $300 because the same one contract controls 100 underlying shares of SPY. So if the stock rises $1, which it does all the time, Your equity is now $54,300. But if that same stock goes up $1 and your option having a 50 delta, which is the relationship between the underlying stock and the option and the underlying stock, I should say, that means your option will go up to $350, right? Take a look at your return on investment. This is the number you got to look at. 1.8% on the stock or 17% on the option. Well, which would you rather have? Whopping 17% or 1.8%? Folks, once I discovered the power of options, I never traded stocks again. All right, never traded stocks again. And you can make a lot of money. And this is how you can do it. You can go in and out all day long. You can go in and out all day long. And this is how you do it. All right. I think I kept you long enough. It's 9:19, 9:20. As I flip over a little bit. Folks, one stock, one strategy, 1 hour a day. Learn from our mistakes as you won't live long enough to make them all yourself. And I think this is really what it's all about. Trading Room subscription page is coming up. Thanks for joining us. As always, it's been a pleasure. We hope to see you in the Trading Room tomorrow morning. And have a wonderful week.
You're the one, shine brighter than the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you